Spain last week announced its 2013 budget, but the overwhelming consensus is its key growth and deficit targets are far too optimistic and simply won't be met. A ratings downgrade to junk status for the Eurozone's fourth largest economy looks increasingly likely. Well, joining me now in the studio is David Riley. He's Head of Global Sovereign Ratings at Fitch Ratings. David, thank you for joining us. Well then, is a downgrade for Spain to junk going to come sooner rather than later?
Well, in terms of Fitch, we've already indicated that we wouldn't put Spain into a speculative grade if it requested, in response to a request for support from the European Stability Mechanism, which of course would also unlock potential bond buying by the European Central Bank. So, although, as you've indicated, some of the assumptions certainly are optimistic in terms of the Spanish budget, nonetheless, we do think that they're putting in place a programme which is consistent with getting support, and we'll give some time to see how that evolves. So, from our point of view, I don't think we're anticipating that we would take a further negative rating action on Spain in the near term.
Even though, as you say, I mean, we were talking before we came on, your growth forecast, or your forecast for Spain next year is a contraction of 1.5%. That's three times as deep a recession as the official forecast.
Yeah, and that is certainly one of the concerns underpinning the budget projections by the Spanish government, is that they are assuming a rebound or a stabilisation of the economy. And I think the biggest threat from our perspective to Spain's investment grade status is actually that the recession there intensifies, and that spills into greater concerns about bank asset quality as well as the solvency of the Spanish state. But we're still talking about forecasts at this stage. They have actually set out quite a aggressive budget. Even if you don't think they're going to hit the targets, they are actually taking some difficult spending and tax measures, and they are in the process of trying to formulate additional structural reforms to try and get the economy going.
You mentioned the banks there. What was your reaction to the independent audit on Spanish banks, and also the apparent backpedalling by Germany, Holland and Finland on propping up troubled banks, not just in Spain?
Yeah. Well, I think the stress tests that were conducted by the sort of independent external auditors, in terms of the overall level of losses, they're broadly consistent under their sort of stress or adverse scenario with in fact our baseline. We actually generate bigger losses in the Spanish banking sector under a stress scenario. So we actually think those numbers are reasonably plausible in terms of losses. Where we would have some differences or some concerns is we think they're optimistic in terms of the amount of capital that Spanish banks can generate through future earnings, and also we think the Spanish banks are going to have a higher capital ratio. But I think the key takeaway, and I think this is the takeaway the market has taken, is that it's within the 100 billion envelope that has already been committed to Spain as a way of supporting the banks. Just on your point about the statement that came out from the Dutch and the Finnish and the Germans about the treatment of the legacy assets, I mean that is adding to undoubtedly the whole sort of uncertainty about how the European Stability Mechanism is going to recap whether these costs will be shared across the Eurozone as a whole, and we'd hope and expect we'd get some clarity on that in the October summit.
I'll come to the ESM in a second, but final question on Spain: are we looking at a restructuring of Spanish debt?
Well, we still think that's a relatively low risk that the Spanish will restructure their debt. I mean, they clearly the public debt is increasing significantly. But one of the biggest pressures that Spain is facing, we focus very much on the sovereign, but it's actually trying to stabilise the outflow of private capital. There's a huge amount of capital has been leaving Spain, and so Spain as a whole, Spain Inc., if you like, has been struggling to fund itself. If the ECB measures and support from the ESM can stabilise that, then suddenly the economic outlook and the budget outlook for Spain will start looking potentially quite a lot better.
On to the ESM. I know that Klaus Regling has asked you to give the ESM your rating on the ESM. Can you guarantee that it will be AAA, or is there any doubt at all that it won't be?
Well, I mean, it's really not really possible for me to comment on about a rating which we don't actually have public at this point in time. In terms of the European Financial Stability Facility, which is the sort of precursor, if you like, to the ESM, we do have a AAA rating on that. The European Stability Mechanism will have very strong backing from the major AAAs, including, of course, Germany. And it will also have, unlike the EFSF, paid-in capital. So these are sort of important credit enhancements. But I mean,
the situation is getting much worse, and these public purses are coming under increasing pressure.
Well, the funding actually for the ESM in terms of putting in paid-in capital is already in the process of actually being raised by the individual national government. So there will be capital that's actually paid in. The issue then is, how big will those potential ESM liabilities become? But at this point in time, we obviously incorporate into our rating of the ESM what is the existing ratings we have on the shareholders.
When can we expect that from you?
Well, again, the ESM is not yet actually been fully inaugurated, and in fact, I think that's going to happen on the 8th of October. So until that happens, there won't be any public ratings on the ESM.
Okay, just want to finish up on the US. Still AAA, of course, but still a negative outlook. Yeah. That was in July. Has there been anything in the last 3 months, in the 3 months since, that has made you any less or more positive on the outlook for the US?
No, I mean, I think from our perspective, the US economy has more or less been performing in line with our expectations at the time. So we've got a pretty tepid recovery, but nonetheless, the US is still growing. We think the risk of a sort of double-dip recession is quite low, except for one big issue, which of course is whether the US falls off the fiscal cliff. And
there's still no progress on that.
And to be frank, I don't think anybody expected that there would be. I mean, let's be clear about it. We are at the height, of course, of the sort of presidential and congressional election period, and you weren't going to get the kinds of serious negotiations during that period. Once the presidential election, congressional elections are done, then they are going to have to move pretty quickly to address that issue.
Okay, David, thank you very much. My thanks there to David Riley of Fitch Ratings. That's all for now, but do stay tuned for live coverage of the ECB Governor Mario Draghi's news conference this month from Slovenia. I'm Jamie McGeever. This is Reuters.